Good day. Today, we are diving into a key part of investing that often gets overlooked: ETF fees. Understanding fees can save you thousands and boost your returns over time. Let's break it down with simple animations. ETFs come with different fees, but the most important one is the management expense ratio, or MER. This is the annual fee the fund charges to manage your investment, usually shown as a percentage. For example, VAS charges about 0.07% per year, IVV charges 0.04%, and MOAT charges a bit higher at 0.49% because it's more actively managed. Even small differences in fees matter because they reduce your returns. Imagine paying 0.5% instead of 0.05% over 20 years. That can cost you thousands in lost growth. Lower fees mean more money stays invested and grows over time. That's why many Aussie investors prefer ETFs like VAS and IVV with very low fees. When choosing ETFs, check the MER, management fee, trading costs, brokerage fees, any other hidden fees. This video is for education only, not financial advice. Always research or speak to a licensed advisor before investing. If you found this helpful, hit like, ask your questions in the comments, and subscribe for more simple Aussie ETF guides. What ETF topic should we cover next? Let us know below.